It's Friday Coffee with your mortgage man, Eric. And today, we're going to talk about interest rates. Good stuff, huh? Real good stuff to talk about. It's been a minute since I've been on here. It's just because we've been busy, and it's not so much with the volume of loans, but it's the quality of the kinds and types of loans that have been coming across the desk have been very much more difficult than the preceding year and a half. So let's dive into this and the recap just a little bit to come to where we are today, right? So back in March 2020, not only was that infamous for the pandemic that had started, but right at the beginning of March 2020, we were notified, hey, you're going to be hit with a major refinance boom. It's coming, rates are lowering, and we were. And it was good, right? I mean, anybody in the industry it was a really good time. And consumers, right, could refinance into the twos. And when that was happening, we were telling people, look, rates have never been this low before. You're never going to see them this low again, most likely, while we're on this planet. And I think, for the most part, that all becomes rhetoric and lip service, right? And we become immune to it, like the emails we get, right? It just is what it is. We don't answer phone calls anymore. Heck, we don't even look at our emails anymore. And seems like the only way we can get your attention, maybe, hopefully, is if we send you a text message. So it's like the email, right? We become immune to it. Oh, rates are low, rates are high, rates are going up. We become immune to it. Now, with that being said, this kind of a recap here. We told you back in March 2020 that, hey, jump on this refi bandwagon while it lasts. And I think what part of the problem was those rates in the high twos, low threes lasted for about a year and a half. And that's a long period of time. So you kind of just get spoiled. You get acclimated to that type of an environment, which is very abnormal, historically speaking. And you just think, oh, they're 3% is going to be around forever. And then when you hear 3.5%, like you're out of your mind, man. 3.5%? That is so high. You're crazy. I can get a better rate than 3.5%. Right? I mean, that mentality starts to come into the industry, which is, you look at that from a 36,000 foot view. Historically speaking, it's kind of silly. But anywho, so rates have really been coming up for the last couple of months. And, we've been warning you. We've been warning anybody and everybody that's been asking, look, rates are going to go up. Look, rates are on their way up. And I just think that people, again, were immune to it. And so what has happened in the last 6 weeks, right? 7 weeks, maybe tops, is just crazy, insane. I've never seen anything like this as far as how quickly rates are going up. And when I tell people, oh, we lost 36 basis points today, we lost 58 basis points today, I understand that may not mean a whole heck of a lot to you. But I do also follow it up and say, well, it's about 1/8 of a percentage. We lost 1/8 of a percentage today. Well, we lost another 1/8 of a percentage today. And that's kind of been the norm. Today, I'm staring at the screen, we're down 78 basis points. That's terrible for interest rates for people that want to buy a home or potentially looking to refinance, right? That's not good. And look, there's no indication that's stopping. I mean, there is some speculation that maybe they're going to plateau finally in the mid-5s. We're hoping it doesn't go any higher than that. Where are they today? I mean, I'm doing the video Friday, the 25th of March, and understand that this Monday, probably a completely different environment. And who knows, maybe they do go backwards. Maybe we do get an improvement in rates. Could happen. Probably not likely. But, I mean, who knows? We're in uncharted territory right now with a lot of things that's going on in this world. but I would say it's not likely to happen. I would say rates are most likely going to continue to escalate into the mid fives. Where are we today? Depending on the product, right? Conventional, VA, FHA, depending on credit score, right? Those types of things. You're in the high fours, maybe 5%, and that's without any points. When you talk to me about rates, I like to first quote rates without points, because there's a lot of shadiness, unfortunately, that has come back into this industry, and lenders quoting rates with points. And look, the average layman doesn't know what a point is. And they first hear that in the beginning conversations. I can get 475 today with a point. And you really don't understand what that means until later on down the road you see your paperwork and it's got another $3,500 in fees. That's a discount point. And then it finally hits you. And it's like, it's kind of deceptive, in my opinion, to only give a consumer a rate quote that has points. If you're going to do it, explain what points are to the consumer. Allow them to make that decision. And most of the times, it's not worth it. Why do you say that? Because historically speaking, we're about 7.5 years now that the average consumer is in their loan. So when you do the mathematics, how long does it take for that point to pay off? And sometimes that could be 7 years, 9 years, 10 years till you get to the break-even point. So most of the times, it just doesn't make sense to incur those fees. And that's the type of things that I talk to my clients about up front. Back to rates. We're roughly high fours, 5% today. Not good, and they're likely continuing to go up. So with that said, you probably want, if you're on the fence about buying a home, on the fence about refinancing, you probably want to, start looking to move forward with it, because it just doesn't look like rates are going to get any better. Now, why would somebody want to refinance when the rate, it's no longer in the high twos, we're at 5% on a refi? Well, a couple reasons why. One, 5% historically is still a decent rate. Again, historically speaking, United States, since we've been doing record keeping, 5% is on the better end of the scale. So keep that in mind. And if you're looking to do some rehab to your home, that's the way to go. Because you all know it's like, well, I sell this home and I go look for another home that's $900,000 that's just was worth $500,000 18 months ago, right? Or it's $500,000 now and it was worth $220 18 months ago, that you need to put $100,000 or more into, right? That is the reality where we're at today. So people that want to pull money out to put it into their home and or paying off credit card debt. Why? I think it's a wise thing to pay off credit card debt. I don't think it's a wise thing to pay off an auto loan unless you have to. I can, that's probably a 10-minute conversation or video for another day, but credit card debt, look, if we're honest about this, the average American, if they got a $5,000 or $10,000 or $20,000 credit card or $30,000 credit card, and I see them, what is the likelihood that you're going to pay off that $20,000 credit card in the next 20 years? It's not likely. It just isn't. Those things are going to, follow you around to your death. They start compounding interest. You make the monthly minimums. It's like being on a bike pedaling away with no chain. You just aren't going to get anywhere. So pay the daggum thing off and put it behind you. Cut the cards up. Stop living beyond our means. There's another thing that we do as Americans, as most of us live well beyond our means. Anyhow, just some of the tips that I would suggest to do, and a lot of the loans I'm still seeing come across my desk, people are still inquiring about cashing out, refinancing, even with the higher rates, because it makes sense. I don't want to go buy another home in this market. Are you kidding me? It is insane to just get awarded a contract, and then how much money you have to put into it after the fact anyhow. Is it worth it? That's up for you to decide. So keep that in mind. With that said, I know it was a lovely conversation, right, about interest rates. Who really wants to hear bad news? But I get asked the question all the time, where are rates at? Where do you see them going? And here we are. Rates are much higher than we were 2 months ago even. That said, it's Friday Coffee with Mortgage Man Eric. See you.